Okay, Siddharth, thanks for that. We've also got joining in on the show this afternoon, Ankur Shah, founder and CIO of Value Investing India Report, and he's joining in on a Skype connection all the way from Dubai. Ankur, good afternoon. Thanks so much for taking time out for us. For the last 40 minutes or so, we've been talking about all the domestic factors at play for our markets. But I want to start this discussion by talking about what the global markets are up to. After trading off on Monday, both the US and the UK sort of open up today. And this is a week that's fraught with a whole bunch of macro cues for the global markets. On Friday, you had Miss Yellen somewhere sort of joining the chorus of a Fed rate hike coming this summer. Should we actually see the Fed hike rates in June or July? How do you suppose our markets are going to take that? Are we going to see perhaps a knee-jerk reaction?
Sure. I think it's interesting. If you look at the Q1 GDP growth for the U.S., it came in at about 2% on an annualized basis, which is actually quite good. So I think that kind of increases the chances of a Fed rate hike. And the overall equity market in the U.S. is now in the 7th year of a bull market. So it's, I think, personally one of the most hated bull markets in history. But we continue to see strength in the U.S. market and both the economy as well. So I think the chance for a rate hike in the second half is quite high. And typically what that means for the U.S., for the Indian rupee is usually negative, and also negative for emerging markets across the board. But I think it'll be a short-term hit most likely, and since the fundamental story is quite strong, I think it'll be a near-term weakness. But overall, I think it should be okay, and the Indian economy should be able to handle that.
Ankur, apart from US Fed action in the month of June, we are also pitted against two important market moving events, one local and second global. A, monsoon, B, Brexit. So from a market standpoint, from a volatility standpoint, how important are these two events?
Yeah, I think the monsoon is going to be quite important. You had the latest inflation numbers for India come in a little bit higher than expected at 5.4%. So I think that definitely reduces the chance of a further rate cut by the RBI. So I think unless you have a very strong monsoon, I think you're going to see further food inflation and more pressure on Rajan to hold rates steady. So I think that's a negative for the Indian market. And the Brexit, of course, is always a concern, major macro concern. I think in the short term it could increase volatility dramatically. But I think longer term, I think it plays out okay because the domestic story is still quite strong in India.
Ankur, let's talk about the action that we're seeing here in our markets. The last 5 days have been pretty stellar. You could call it a rip-roaring rally, if you like. Do you believe that this is a rally that perhaps has more legs? Is there more steam left to this one? Or are we now going to sort of wait and pray that the monsoon gods oblige?
Sure. I think from my view, I think fundamentally the economy is quite stable. Let's say 7.3% to 7.5% GDP growth for the year. India is definitely the fastest growing major economy globally. Valuations are quite reasonable. Depending on what consensus estimates you use, 14 to 15 times forward earnings. So from a valuation perspective, I think the market looks good, and I think the fundamentally the story is quite okay. So I think we see a continuation of the current rally.
What about valuations? I mean, to make a valuation argument for Indian markets when they're trading at about 14-15 times 1 year forward is very difficult. So I understand growth is strong, I understand the macro is strong, but price is what you pay, value is what you get. You're paying the price, but value is missing.
Yeah, I think rather than from a macro perspective, I think you got to look at the individual stock stories. Like for example, the L&T results that were quite much better than expected. You had a big pop in the stock. So I think you're going to have to make an individual stock selection kind of the focus of your strategy going forward, as opposed to kind of a macro call on the market as a whole. So I definitely think individual stocks is a way to play the current market environment.
Stocks or perhaps sectors, Ankur, that you would like to back at this point that looks good to you?
So it's interesting, if you look at the banking sector results, it's been quite horrendous for the public sector banks. We've had, for one particular bank, the worst results in the history of Indian banking for the quarter. And so I think you're seeing a lot of pressure on the public sector banks. But at the same time, you're seeing the private sector banks being hit kind of in sympathy with the public sector banks. But I think the ones with kind of a retail focus are still doing okay, and credit quality has held up really well for the Indian consumer. So I think that's where you want to focus. And also I think the housing finance companies look attractive just because you have a very long growth story there, and definitely significant under leverage compared to the rest of the world in terms of mortgage financing.
Okay, Ankur, appreciate your time, and so glad you could join us, and thank you for your wonderful thoughts. Now moving on, CK Birla Group Control Orient Cement is